Thank you everybody once again for being here. For those that joined early, we appreciate each one of you. So today we have a great panelist, the great panelist team that we always have. And, they have so much experience. We want to start with Carrie Lazar from Illinois, She is our marketing content specialist. So all the graphics that you see on your screen, all the beautiful pictures and the beautiful content, she's the mastermind after that. So Carrie, thank you very much from the marketing department. We appreciate you. We also have Kim Fridley. Welcome back. After a long vacation, we missed you last week. She's our membership development analyst. So she's going to be also, answering questions and paying attention to details and everything. So we appreciate you for being here and sharing your experience with us. And last but not least, we have our very own presenter, Milton Aguilar Bolaños. He's, the one that's going to be presenting. He's our membership development officer, has so much experience with membership, business, retail, you name it, he has the answer for you. So, and lastly but not least, also, I want to introduce myself. My name is Eddie Villanueva, and I'm marketing engagement assistant here at the United States Center for Credit Union. We coordinate events and we work very closely with Kim and Milton to provide engagement events to you all. With that being said, Milton, please, one more thing. Please, if you have any questions during the presentation, you can use the chat function to, type your questions, or you can use the Q&A feature. So whichever you would like to do, we're going to answer all those questions live at the end of Milton's presentation. Milton, please take it away.
Thank you, Eddie. Thank you so much for the introduction. I truly appreciate it, and thank you all so much again for putting this together. And with that being said, good evening, everyone. Thank you all for joining us on another exciting webinar here at the United States Senate Federal Credit Union. Today's topic, one that is very important, and it's all about credit, and most important, how to build it, how to build credit all the way from scratch. So this applies to those that are, pretty much are just turning 18 and you're looking to build a credit, or for those that have gone through, whether it's a bankruptcy, whether it's a situation where you destroy your credit and now you want to build it right back up. This is definitely the information that you want to that you want to receive, so that will help you with building it back up. And then obviously, we're going to go over through a lot of things here. So, but with that being said, let's dive into the agenda of what we're going to be talking about. And again, like I was saying before, so it's all about credit, right? So what is credit first? We want to be able to understand, what exactly, credit is and why is it important. Also, we're going to be giving you the tips and tools on how you can build or rebuild your credit. What are some of those myths that you see out there? Are they real, or are they just something that it gets spread around, and somehow people might fall for them? And then obviously the last topic that we'll be talking about, which is for me is the most important one, is going to be, what are some of the healthy credit habits that one must implement in order to, continue to build your credit. But not only that, but what it is that you need to do to make sure that your credit stays the way it is, or always improving it. Because if I'll tell you one thing right from the beginning, it is very hard to build your credit. It takes so much time. It truly does. It's years of hard work, but to destroy your credit, it doesn't take much. Quite frankly, in 3 months or less, your credit can go from excellent to poor in that very short time frame for something that takes you so long to build it up. And with that, again, it's just so much that can happen in between. So let's dive in. Let's take a look at what is credit. So credit, again, it's an agreement when someone receives goods or services, now understanding that they must pay it back. If you receive a something from a lender. So in essence, that is the short story of credit. So you definitely need to know, what it is and the importance of it. With that being said, once you had established credit, once you build your credit, the next thing that you want to look for and then you're going to be receiving is going to be your credit report. So a credit report, long story short, it is a statement that has the information about your credit history. So it has all of your activities. It shows all the loans that you have. What standing are they? Are they in good standing? Are there is there any negative that is showing up there? Also, how much of your credit are you using? Are you delinquent? Have you been late on your payments 30, 60, 90 days or more? Or have you filed for any for bankruptcy? Or again, if there are any delinquent accounts out there that have gone into collection. So all of that, it's something that you will be able to see on your credit report. So and all of this information gets sent to three different companies known as the credit bureaus. I'm pretty sure you all are familiar with the three big companies. One of them is Experian. Then you have Equifax, and the last one in no particular order is going to be TransUnion. Again, so these are going to be the three bureaus that will collect all that information, and financial institutions or any company that does lending will contract with them to receive your credit report. And they once they look and review your credit report, they will be able to make a determination whether or not, one, if you're able to if they're able to lend you money, whether it's any type of loan or lines of credit, and if so, at what interest rate will you be able to receive the loans that you will be getting. And with that being said, it is very important that you must be aware of the website that the government has created for you to keep track of those of your credit reports. And that website, again, I feel like I every webinar that I'm particularly involved in, I feel like I'm always talking about it, and I never get tired of reading letting you know what the website is, which is the annualcreditreport.com. This is going to be the website where you'll be able to obtain a free copy of your credit report from each one of the three bureaus, from each one of the three companies, or from Equifax, TransUnion, and Experian. You'll be able to obtain your credit report for free every 12 months. And as I have mentioned in the past, my advice is that if you're doing that, is to make sure that you space out the time frame as to when you're requesting the reports from every of the three companies. I will never advise you that you obtain your credit report, the three credit reports from all the companies at the same time, just because so there can be things that can happen throughout an entire year, and unless you're willing to pay to receive a different report, I'd much rather have my advice is always to wait and space it out every 4 months. Get a copy of your credit report every 4 months from the different credit bureaus, and obviously that's going to be helpful for you in order to keep track and see what is it that is showing on your credits. With that being said, I might also mention that every bureau, every company, every credit company reports different information. Not all of the companies are going to have the same information in their reports. So that is something that is very important for you to understand as well too. And then we're going to dive a little more in detail as we go on the presentation. But just so you know, what are some of the things that are included in this report? Obviously, the most important thing is going to be your identifying information, your credit, account history and information, any public records such as bankruptcies, collection accounts, and also who has accessed your credit report. So every time there's an inquiry on your credit, especially if there's a hard hit, what we like to call, you'll be able to see who, uh, where, and when those reports, those inquiries came in and to your credit file. So again, it's very important for you to have a great understanding of what's happening, with your credit. So we, again, I highly encourage you to always make sure that you are on top of your credit for various reasons. Even if you're not too concerned about what your credit report is, your credit score is, but it's also helpful, especially nowadays with fraud. Fraud is something that it's in the rise. With so many different approaches that the criminals are now taking, it's insane. So reviewing your credit report definitely, it will come handy for not just to keep an eye on your credit score, but also just to make sure that there's nothing fishy that is showing in there. So again, it's I truly encourage everyone to obtain a copy of their credit report at least every 4 months, since it's included and it is for free by going to the annualcreditreport.com. Now, these are the things that are included in your credit report. What are some of the things that is not included? And again, this is kind of like, it's going to cover a little bit of the myth that a lot of people sometimes spread around. But I will tell you this right now: your credit report is not going to have any income information. It will not provide any assets that you own. It also doesn't have balances from your savings accounts, and also information such as your utility, any bills like rent or utilities that you might pay. However, I want to emphasize a little bit on this last bullet that I'm mentioning here, and that is because I do know from experience, there is a credit company that actually they promote, because I seen the advertisement on how what are some of the ways on how you can actually improve your credit, and it by and one of the things that they're allowing the customer to do is to actually add utility bills to the credit report. So if you do that, that is something that you're going to have to do yourself manually. And then obviously, if you have a great payment history, that might be something that probably help you out down the road if what you're looking at is building your credit. However, one thing that I also have to mention, that is that itself becomes another account to your credit file that could potentially hurt you down the road if you're looking for any loans, because it's just going to add another debt to your credit file that a lender might look into, and that could become a factor as well when applying for credit. So again, just wanted to mention that, touch a little bit on this last bullet point, just because oftentimes you will never see any utility bill information there, but because of what Experian is doing, they call it boost your credit, or credit boost. I'm not sure what's the proper term that they use for it, but in order for them to do a boost, they're allowing you to manually add your utility companies to your credit file. That in many cases will help you improve your score, but it might hurt you down the road, just because there's, again, as I mentioned, it might create an additional loan that is going to be an additional company that's going to be showing on your credit file. With that being said, a credit score. What is a credit score? Again, it's going to be a 3-digit number that uses the information from your credit report to predict how likely you are to pay back as agreed credit that may be extended to you. A credit score is not a financial health score, and I must repeat this: a credit score, it's not a financial health score. Oftentimes people, say that, think that your credit score, it pretty much gives you a big picture of a person's entire self, and including a health score, and that is not the case in this particular scenario. Now, with that being said, there are 5 different factors that is going to build that pretty much make up your credit. And I'm going to go through the 5 of them, but obviously where I want to really emphasize and put a lot of, take a lot of your attention, and it's going to be on the one that makes up the most. So if we look at it here, the 5 factors that make up your credit, the one that's going to be there is going to be your credit mix. What type of loans that you have. Is your credit file contains mostly of it's small balance credit cards, or do you have a mix of credit cards, car loans, mortgage perhaps, or student loans? So depending on how many loans you have, that's going to make up 10% of what your credit score really is. Also, new credit. Every time you establish credit, that's also going to be another 10% of what makes up your credit score. And another thing too, and this is also, although the percentage is not as high, but 15%, it's going to be the length of credit history that you have. And I'm probably going to get back to this one here momentarily, but those are going to be the some of the 3 out of the 5 factors that do have an influence, but it's not as much as the next 2 factors that we're going to look at it right now. And one of them is, at the amount that you owe. Obviously, this is going to make up 30% in your credit score, but determining what kind of credit score a person might have. So 30%, it's focused mainly on the amount that you owe. So I think that it's safe to say that when a person gets a big loan such as a mortgage, right? In my experience, I mean, that would be perhaps your biggest loan that you're going to carry throughout your life until that is paid off. So that is definitely going to be a big impact on your credit file. Now, besides that, so if you have car loans, if you have student loans, credit cards, depending on the amount of money that you owe, it's going to take that into consideration, and then based on that, you'll be able to the system will be able to create your credit score. But the biggest one and the most important one here, it's going to be your payment history, because this is going to make up 35%. So it is very important that your payments are always on time, because this is pretty much what's going to make you or break you. And it is important to always, stay on top of your payments. And I will let you in a little secret. And oftentimes, people may or may not know this, but credit late payments don't really show up on your credit file, not until they are 30 days late or more. Again, this is something I want everyone to understand, that your credit, your late payments will not show up on your credit report if they are less than 30 days late. So it is okay to miss a payment, and most likely you're going to pay a fee for paying late. But as long as you pay it before it's more than 30 days, you still be fine. Because this is something that I have had so many conversations with different members throughout my 16 years of banking, where they will come to me and say, they're applying for a loan, and then all of a sudden I'm looking at the report, and then I come across, their file, and I see that they have late payments. And obviously, whenever a lender tells you that some of the reasons why you might not qualify for a loan, or you're getting the rate that you get in, and they're going to tell you is that because you have some late payments in your credit file. And the explanation that I often get is that, I missed the payment, and I figured that since I already missed it, that it would be okay for me to make it up the following month. And that is something that I truly want to emphasize, that once you're late on your payment, and if it's less than 30 days, you're still in time to make that payment without having any impact on your credit score. So it truly is important that you stay on top of your payments, because again, as you can see, this is what pretty much makes up the most is the most important factor that determines what your credit score will be. And also we're going to go through it here in a couple of slides that are coming up. I'm going to give you pretty much a picture that's going to show you, what are the what happens, when your credit is not so good versus, when you have excellent credit, and what are what is the differences in terms of the payments, especially for those that are looking to apply for, various types of loans. So again, it's very important that you stay on top of your payments, and even if you're late, if you miss the payment by a couple of days, pay it as soon as possible, but do not wait until they're past 30 days, because if that happens, then that is going to be reported to the credit bureaus. Anything less than 30 days will never be reported to your credit bureau. So that's something that I want to make sure that you all take away from this presentation this evening. The next thing that I want to show you all, it pretty much is the range for your credit score. So in essence, you can go from 0 to all the way to 850. But 0 score is for a person that has no credit history whatsoever. Now, if any person that has established credit, and they're just getting in the early stages, and if something happened, something went wrong, and they all of a sudden they're late on their payments, and they're or they have an account that went into collections, and then so that's going to destroy your credit. But once you have established credit, the lowest score that you can have with the credit bureaus is going to be 300. So 300 it's pretty much, it's going to be all the way at the bottom, and it can go as high as 850. As financial institutions, we have a bracket. We have a bracket that determines where you fall, and this is pretty much, believe it or not, this is what determines what kind of rate you're going to be getting from for an institution whenever you're applying for credit. So poor credit is going to be anything between 300 to 579. Fair credit is going to be from 580 to 669. Good, we consider anything between 670 and 739. Very good is going to be 740 to 799, and excellent credit is going to be 800 to 850. Now, with that being said, I want you all to know that with us, in order for you to get a good rate from most financial institutions, as long as your credit is above 700, you're going to be in a good shape. But you never want to be in the fair to poor credit, because that, as you will be seeing here very soon, it's gonna paint a very clear picture. And it's obviously, I hope that it's going to encourage you to always put a lot of effort to build your credit, build it up, and not be in the category between poor and fair. Because if you are there, that means that every time you apply for a loan, the odds of you getting approved are going to be a little slimmer, and then if you do, you're going to be getting an interest rate that are going to be pretty significant, pretty high, pretty much for the most part. So again, it's very important that that you stay on top of your credit, and then what are some of the things that you can do with that. Now, with that being said, another term that you probably might have heard is going to be FICO. And FICO, it's a score that a lot of financial institutions use to determine what your credit score is. And just so you know, your FICO score is going to be different than your credit score. And the reason why that is because financial institutions sometimes will partner up with different companies. And let me tell you this, a financial institution like us, like at the United States Senate Federal Credit Union, we use what we call a company that it's called, hold on, I'm sorry, just name slip over here for me. One second. Sorry about that. I'll be providing you the name of the company that we use that gives us the FICO score for us. But again, but the FICO score is going to be pretty much it's a credit it's a credit company that we utilize that pretty much puts in place all of the three different bureaus and gives us a clear picture of where you stand. And the reason why I say that is because as I mentioned early on in the presentation, oftentimes all the three different credit bureaus, they don't always report the same information to your credit file. And don't ask me why, but I don't know. It truly is very interesting as to, what are some of the why that is. There oftentimes the time it takes for them to report a certain loan, it takes a lot longer with one company than the other. In some cases they don't even actually put it in your on your credit report. So what we do, certain financial institutions, what they do, they will utilize your FICO score as a number that we want to use to determine the type of loans that we want that obviously that you're applying for. With that being said, obtaining a FICO score, for the most part, it's going to be something that oftentimes you're probably going to have to pay, or unless you have certain types of credit cards. Some credit cards I know, such as Discovery and American Express, they're able to provide you with a FICO score for free. And most important, we here at the credit union, we actually are able to do that for you as well. And again, it's all free. Getting your FICO score is something that is very important, and it's going to look different than what your credit score is if you were to obtain it from a company such as Credit Karma. And that's the thing that happens in most cases, that a person's might look at Credit Karma and see that their credit score it's a 700. Just give you a quick example here. But when you go into a particular financial institution and they run your credit and they say, well, your FICO is 680, and then you're gonna go and say, why? I mean, Credit Karma is telling me that it's 700, but you're telling me 680. Why is that? And again, as I was mentioning before, the difference between that is there's two different companies that report different information, and so that's the reason why the scores, the numbers that you're going to see are going to vary. So again, to have a clear picture, I highly recommend that you visit our website, ussfcu.org/FICO, and then you'll be able to obtain your FICO score for free. You'll be able to see all of your payment history, all the debt that you have, the length, the amount of new credit, and your credit score history too. And again, all of that is provided for free. And the most important thing also that I always like to emphasize that our members use whenever they go into the website is that we have a feature there that's called Score Simulator. This is something that it truly is very important, because for those that are thinking about obtaining a loan, or what will happen if I pay off my credit card, or what will happen if I miss a payment, you can plug in various different data in there, and this simulator is going to give you a very clear understanding of what that impact on your credit score that is going to have. So again, it's very important for you to utilize the tools that you have available, and obviously the one that we have here at the credit union, it's excellent. I highly recommend it for all of you to use. With that being said, after I told you guys all about credit, what are the factors, what is the range and everything. The reason why we say that, we talked about that, is because credit is important. But why is it important? Again, credit can impact your ability to rent or purchase a home, your ability to get and keep some jobs. Believe it or not, nowadays, there's a lot of companies that when they're recruiting, they're hiring, one of the first things that they will do is that they will actually go and run your credit. And depending on what's on your credit. So if you're a person that has a great work ethic and it's excellent and everything, but somehow you neglected a little bit on the credit side, and you have accounts that are in collection, or you might be past due on certain types of loans. All of that is going to be shown, and your employer is going to see that, and they can utilize that to make a determination on whether or not you're going to be hired. One particular industry that I know for sure that they utilize this is going to be the financial institutions. So if you're a person that wants to go and work for a financial institution, you need to make sure that you have good credit. Otherwise, that could be a factor as to why you might not be selected, even though you might have you might be the best candidate for that position, but because your credit is not there, because there's something on your credit that will prevent you from getting your job. So again, it's very important. These are some of the reasons why credit is important. Also, your ability to open a bank account. I mean, as simple as that. Or obviously, access loans and credit cards. I mean, credit is definitely it's going to be the number one thing the financial institutions are going to look at. And believe it or not, getting a car insurance, getting a cell phone plan, that is something that nowadays there's a lot of companies that do that. I know for a fact Verizon, AT&T, those are two companies that I'm aware that they will run your credit, and they will determine whether or not you need to make a security deposit in order for you to have, get a plan with them and purchase a cell phone. So it truly is. And also car insurance, that you might have a clean record, never no tickets, none of that stuff. But if your credit score it's bad, that might be a reason for them to increase your rate. So again, in credit, it's very, very important. And obviously, the last bullet point here is, and again, in my opinion, it's going to be the most important thing, the one that's going to have an impact on you right away. Credit is pretty much is going to determine, how much you will pay in order to access credit. So this is a graph here that I wanted to show you that, in my opinion, it's very powerful. If you look here at this chart, this is an example for what will happen if a person was to get a car loan. The example that we're using here is going to be a loan for $20,000 for 5 years or 60 months. What will happen? What kind of payments, monthly payments, are you going to be making on a $20,000 car loan for 5 years? So if you look at it, I want to start from the bottom to the top. If you are in the credit score between 5 and 589, and the reason why we don't show 400 is because 99% of the financial institutions or dealerships will not do financing if your credit score is less than 500. Let me just make sure I make that clear. If your credit score is less than 500, the odds of you getting a car loan, approved for a car loan, are pretty high that you will not. So with that being said, 500 to 589 interest rate. And again, then we actually are being very conservative in this one because I've seen rates even higher than this. But 16.05, your monthly payments on a $20,000 car loan would be $487. The total amount of interest that you will pay, $9,213. Now, I want you to focus on not the excellent credit score, but let's look on the very good credit score, which is anywhere between 690 to 719. The interest rate, 5.04%. Your credit card, your monthly payments, $378. Total interest that you're going to pay in 60 months, $2,668. That is a difference of more than $100 a month that you'll be paying. And if you look at the combined amount, it truly is over $6,000. Now, if you look at the first one, all the way somebody that has an excellent credit score between 720 and 850, interest rate, it's even lower, 3.73%. Your monthly payment is 366. total interest paid once the loan is paid off, if you take the whole 60 months, 1,962. Look at the difference. Look at those two numbers right there. That is over $7,000 that you could save if you take care of your credit and build it up where it becomes what we like to consider excellent credit. So again, this is something that I truly want you all to understand, that why credit is so important. And as I mentioned at the beginning, it takes a lot of time for you to build it. It takes so much time, but in order for you to destroy it, give it a 1, 2, or even 3 months, and then your credit score can go from an 850 all the way to a 400 or less. Um, with that being said, you know, how do you build or rebuild your credit? So this is obviously, where we want to put a lot of emphasis. Um, the first thing is you're going to be able to see that there are credit building products that you can get. The first one and the most popular one is going to be a secure credit card. A secure credit card, the way how it works, this is for somebody that is 18, or somebody that had never had credit, and now all of a sudden they want to start building credit. The fastest and the easiest way to do that is by obtaining a secure credit card. A secure credit card, the way it works is you go to a financial institution, you tell them you want to set up a secure credit card, and all you do is you put a deposit. For the most part, it varies. It can be as low as $200, and you can go as high as you want. But what it is that you put your own money. The financial institutions in return goes and gives you a credit card, but the money that you use on the credit card is your own money. And so after 6 months of having a secure credit card, and making payments on times and having the balances low, that automatically is going to start reporting positive credit to your file. And all of a sudden, you're going from zero credit score, or if you're in the 300s, 400s, you're going to see a big improvement. I seen it where the last customer that I had, the last member that I had, this was about 2 years ago. They had a credit score of 475. We did a secure credit card, and within 6 months, her credit score was 605. And that, again, in 6 months, she went from 475 to 605. That was a big improvement. And obviously she kept that going. And obviously now, once she did that, after 6 months, she was now able to qualify for just a conventional credit card. So she no longer needed to have the secure credit card. But again, getting a secure credit card would be, in my opinion, one of the best way to how you can go ahead and reestablish or build your credit. The second one, it's a credit building loan. This is pretty much very similar to the secure credit card. You put in you deposit an amount, and that's your own money, and then you decide the term. However, the term you want to do it. Oftentimes, these types of loans, you're going to see that they go for 12 months, 24, 36 months. And then in essence, you put your own money, the bank will go ahead and lend you against that your own money, and then you decide the term that you want, and then you make payments to it. 12 months is the most popular one, just because it's easier for you to pay it off quicker. And then within 12 months of having that, again, it's similar to a secure credit card. It's also going to report positive credit, and it's going to help you build it or reestablish it fairly quick. The other thing that you can do also on how you can build or rebuild your credit is becoming an authorized user. So if you are, again, if you're someone that's 18 or even under 18, believe it or not, you can actually become an authorized user on a credit card with one of your parents, or if you're married, with your spouses. And then by doing that, that would automatically start reporting credit to yourself. So it truly is another great tool to utilize. However, I must emphasize that becoming an authorized user will not have the same impact as far as how fast you're going to be able to build or rebuild your credit compared to a secure credit card or a secure loan. Um, Now, with that being said, you know, the key here is that once you start building your credit, it is important that for, let's say you already got your secure credit card, you build your credit you're building your credit up, you're slowly building it, and then you're able to obtain just a regular credit card that is no longer a secure credit card. So once you're in that stage, it is important that you always, make sure that you pay off your outstanding balance and or your past due balances, and that are always making those payments on time. So prioritize catching up on past due payments, and do not let those accounts go into collections, because once it goes to collection, that means that you missed the payments and it's been over 90 days, and all of a sudden, you are in a pickle now, because the credit card company the company that issued the credit card, or whatever loans that you obtain, is no longer able to help you, because they now sold your account to a collection agency, and that is going to really hurt your credit. So again, if you are building or rebuilding, it is important that once you obtain credit, that you stay on top of your payments. Always pay, make your payments on time, and make it a priority to pay off any outstanding balances. With that being said, um, with the credit building products, as I said before, the secure credit cards and the credit building loans, it definitely is gonna be this, in my opinion, is the best way to go, and then build your credit the fastest way. Again, with a secure card, after 6 months, you see a huge improvement, especially for those that are looking to build credit all the way from scratch. Now, we get to the myth part. This is something that it truly is interesting. And there's so many myths that I want to go over with you guys, but I'm trying to go as fast as possible, because this presentation is a little long. But the number one myth that I see oftentimes, and that is that that's related to credit, is that you must carry a credit card balance from month to month in order to build credit. Um, Let me tell you that it truly that is definitely not something that we will advise. Carrying a balance, it is not what you want. My advice is, if you have the means to pay off the balance, pay it. Never try to carry the balances over to the next month, because what's going to happen is that if you do that, if you carry a balance into the next month, you probably going to do the same thing the following month, and so on. And all of a sudden, your balance are going to get too high, that instead of helping you, it's going to be hurting you. Because that's another thing too that I must say on your credit. It is important that your utilization on your credit cards, you want to keep it at 60% or less. You never want to go over 60%. So, keep your balances less than 60%. But obviously, again, my recommendation is that if you can pay off the balances every month, do so, and that's really is going to become very helpful. Now, the second one, another myth, that all credit scores are the same, and that is, again, as I mentioned before, that is not true. Credit score companies, they all report different information on your credit file, so there will never be the same. There, for the most part, they will be very similar, but again, and if you were to go ahead and request your credit reports from the three bureaus, and you'll be able to go in one by one, and you will see that for the most part, the dates that the information gets reported is going to be different, or in some cases they won't even be there. And that is because some companies, they don't report to all of the three credit bureaus. So again, it's very important for you to know that not all your credit scores are the same. Um, Myth number three: opening a new credit card every time I get an offer is a good thing for my credit score, because you need lots of credit cards to build credit, and that is no. You do not need to open a credit card every time you get an offer in the mail or in the email. In fact, that can actually hurt you. My again, our recommendation is that if you can keep your, the total of credit cards to three or less, that's ideally where you want to be. But that doesn't mean that go and apply at every offer that you receive in the email or via email. You never want to have too much, too many loans, or too many accounts on your credit file, or your credit report, because again, that could become a negative factor when it comes to that, when your credit score is being built. Um, Myth number four: closing a credit card when I pay it off will improve my credit score. Um, this is kind of a yes and no. The reason why I say that, obviously, paying it off your credit card is excellent. If you can do that, do it by all means. But if you close it, depends. And then the reason why I said it depends is because, if, for example, if you pay off your credit card and that card happens to be one of the oldest credit card that you have in your file, that by you closing that particular credit card, it's going to hurt your credit. And the reason why I say that is because one of the things that the companies look like, financial institutions look at whenever they review your credit file, is that the length of time that you have had credit open. And newer credit, even though it's good, but there's not a lot of history to look at. Rather than looking at a credit card that you had open and you had open for more than 5 years, that is going to give you more history, and it's going to give us a bigger picture as to what are your spending habits, how are you with your payments. So if you were to close, if, let's say, for example, if you have two credit cards and then you look and you're thinking about closing both of them, and then one of them is that you opened about 12 months ago, and the other one you opened it 5 years ago. By closing the one that was open 12 months ago, it's going to have a less impact on your credit versus you closing the one that has been open for more than 5. And again, it's because of the length of time that you have had the card. So and obviously, like I said, paying it off would be the best thing to do, but should you really close it, I will say you can always hide the card and just lock it away so you will never touch it. And that will continue to be reporting good credit for you, because it's a card that you have had for a long run, rather than you closing it. Because if you do that, then you're losing the credit, the one of your cards that have had more history on your credit report. So again, that's one of the things that I want to advise on that one. The next myth, and I think this is probably going to be the last one before we go into the next subject here, and that is that checking my credit report will hurt my credit score. And the answer is no. Checking your credit score will not hurt your credit score. In fact, we encourage you to always be on top of it. And if you use companies such as Credit Karma or Experian, I mean, there's so many different companies out there that you can check, that you can use, including the ones that come with certain credit card companies. Looking at your scores will definitely have no impact on your credit score, and it will not hurt you. The only time that'll become a negative is if you have inquiries that are being run against your credit. So if you're applying for credit cards, or you're applying for loans, different types of loans, that in fact is going to be a negative impact. Again, it's going to hurt your credit. So that myth, we can definitely say that this is not true. With that being said, and as we get in wrapping up the presentation, we want to share with you what are some of the healthy habits for you to implement. And obviously, the first one is, as I mentioned before, make payments on time every month. Remember, 35% of your credit score is made up from your payment history. So making payments on time, very important. Keeping credit card balances low. We say 60% or less. But ideally, if you can keep it on their 40%, even better. The lower your balances on your credit card, the better it's going to be for you. The more positive credit you're going to be reporting to yourself. Don't apply for new credit cards unless you need it. So be wise. Be very wise when it comes to applying for credit. Oftentimes we're going to be tempted, especially with the retail companies out there. There's so many companies that you walked into the store and they say, hey, if you apply for a credit card, we'll give you 20% off or 10% off or whatever. They're going to try to sweet talk you into it. But before you make that decision, think about it. Do you really need a card? If you do it, is it going to have what kind of impact is it going to have on your credit? And most cases, it probably, the answer will be no. So again, be very wise when you are applying for new credit. So don't apply for every promotion that you receive in the mail or emails, or when you walk in person to a particular retail stores. Don't ignore your bills. Even if you think that you don't owe anything, always make sure you are looking at your bills. Make sure you're looking at the statements, because even your bills can be sent for collection. So make sure that you always stay on top of that. And most important, review your credit reports annually. As I said before, you can go to annualcreditreport.com and obtain a copy of your credit report from the three credit companies. So with that being said, if you break it down into every 4 months, getting a report from one of those three companies throughout the year is going to be very helpful. So it's going to give you a clear picture as to where you stand with your credit. Make every payment on time every month. Again, this kind of goes back to the first bullet that I said, but we just want to emphasize it, that making payments on time, it's going to be the biggest factor for you to stay on top of. Couple of resources that we also want to share with you, and that is one of our external partners that we utilize here at the credit union, and that is GreenPath Financial Wellness. This is a nationwide nonprofit company, that provides education and tools for you to to manage your money better. They do credit report reviews. They have different webinars also on various different topics, such as rental home buyers, mortgage, student loans counseling, you name it. But one particular item that I wanted to emphasize and mention before I wrap my presentation, and that is that they provide what they call debt management plan. And this is for people that are right now in a stage where they think that they're pretty overwhelmed with everything that they owe, and they might be thinking about perhaps even filing for bankruptcy. Before you do that, I would highly encourage that you reach out to GreenPath or a company such as GreenPath, similar to GreenPath, I'm sorry, and ask about debt management plan. Debt management plan, it works wonderful. This is a plan that is designed by counselors, financial counselors, that will be able to do a review, a complete analysis of your credit file, and then they will help you create a plan on how you can become debt free. And then you pretty much tell them, how much of a time frame are you looking to take in order to pay off your balances. And if you do that, I do know by experience that they can give you the tools, give you an idea, and then they will work with the credit card companies to bring down the interest that you owe on certain loans, and also help you out with lowering your monthly payments. This, I will say, this is not the same as doing going with other companies that I can't remember some of the names, but there are some companies out there that will offer you something similar, but in what they do is actually they will hurt your credit score, and they pretty much destroy it, and then they will try to help you out after you are past due 90 days or more on your loan. So don't do those what they call debt consolidation loans, debt consolidation companies. I'm sorry. Those are pretty. In my opinion, I wouldn't recommend that. So again, going to Green Path Services and asking for debt management plan, this is going to be really great. And it also, again, this is, instead of hurting your credit, is actually going to help you down the road. So again, you can go and visit our website, ussfcu.org/Green Path, and they will be able to provide you with more information. With that being said, that brings it to the end of my presentation. I thank you all so much, and I'm very sorry that it went actually a little longer, but there was a lot of information that we wanted to cover. Eddie, send it back to you.
Milton Aguilar, you do your thing again, brother. Once again, thank you. It was a great presentation. Like I always say, I learned something new. And even though I already have credit established, best believe that I might probably go to that link that Kerry provided on the chat and review my credit just to make sure everything is good. So thank you very much for the tips. Thank you for clarifying those myths, because some of them were not really clear to me. So thank you very much. And for everybody that's still with us, thank you very much for sticking with us, through this great presentation. And now if you have questions, feel free to send them on the chat. We will answer them live. I know we have a couple of them. One of them came through the regular chat and a couple of them came through anonymous. People directly contact me. But the first question for either Kim or Milton, whoever wants to answer: how accurate is Credit Karma?
You want me to take that one?
Take it away.
So Credit Karma does offer free credit reports to consumers, but they do compile their own score. It's called an Accurate Vantage score, and it should be pretty close to whatever the 3 major U.S. credit bureaus report. What I want to make sure you're aware of, it's very important that you know that annualcreditreport.com, they actually work, they're jointly operated by the 3 major US credit bureaus. They are the only website that is approved to give free credit reports annually by federal law. The federal law does require that you're allowed to retrieve a free credit report per year. So you can use whatever credit bureau you feel comfortable with, but annualcreditreport.com is the only one that is approved by law and works jointly with the 3 US credit bureaus. So that's the one that most financial institutions, including us, will recommend.
Great answer, Kim. I mean, I really appreciate you for the clarification, because we always see these commercials, whether it's online, whether it's on TV. So it's always good to, have that great expertise from you. So thank you very much for that confident answer. Another question that I have on my end, I'm an 18-year-old and I'm ready to buy my very first new car, but I don't have any credit established. If I apply to a car loan by myself, most likely, would I get approved or would I get denied because I don't have any credit history? And if so, what would you recommend me? Maybe have a co-borrower? So for any of you that want to answer, please do.
Sure. I guess I can take that one, Eddie. And the answer for that would be, come and talk to us. And the reason why I say that is because, if you're an 18-year-old, you have no credit established, but perhaps you already employed, you're already working, and then you already have a source of income that is coming in. We might want to look into it if that really is the case. And so we definitely want to explore all the options to see, if you can still get qualified just for yourself. But if that's not the case, then obviously the safest option would be to go with a co-signer in order for you to get that loan. But the most important thing, again, like what I would say, if I was 18 and I was in their shoes, I will tell myself, go and talk to, somebody at your financial institution. Obviously, in this case, go and talk to somebody at the United States Senate Federal Credit Union, and then we can do an analysis. We can look and see if that truly, what are the path that you can take in order for you to get your car loan.
All right, perfect. Thank you very much. That's a great answer. Due to the fact that sometimes people get discouraged, like, hey, I don't have any credit score. Why would I even apply for the loan on my own? I might as well tell my mom or my dad or somebody from the family to be a co-borrower. But if you're saying to talk to somebody, that's great, because here at the United States Senate Federal Credit Union, we give options and we're very flexible. I'm not just saying that it's because I work here, is because I have seen it. I've been a witness of that. Another question: what credit monitoring company you suggest? I think that goes back to what Kim was saying, that it's up to your choice, or it's your personal choice, but I don't know if you want to elaborate on that, Kim.
That's a great question. I know at one time, the U.S. Senate Federal Credit Union offered credit monitoring company that we partnered with. I'm so sorry, remember their name. So I'm happy if you want to make sure that we have your email address. I will do a little bit of research and try to find you the best option. And it's a great time to come back to the table, to the credit union, to say, hey, this could be something our members could benefit from, a service. So thanks for asking that question.
And if you want to contact either Milton or Kim, call that 800 number, 374-2758, option 7. That's the magic number, option 7. Another question that I have: how to get a 800 credit score? My score is at 737. Looking to get into a mortgage next year. Any recommendations?
That's awesome, and you know what? That's a good problem to have. If your credit score is already at 737, that truly is an excellent credit, especially if you're thinking about buying a mortgage. However, now if you still want to build your credit, as I mentioned before, this is something that building your credit, it truly is going to take it's going to take more time. And so with that being said, I could easily just tell you, go ahead and do what Experian is advertising. I'm sure you guys see the ads where they call it, boost your credit, right, or credit boost. And then add your utility companies to your credit, and that's gonna perhaps find you a boost, because if you've been paying your bills on time, that's gonna be a good credit, good history to be added to your file. But if you're in particular in this particular case where you're looking to get a mortgage, which again is going to be one of your biggest loans that you're going to have in your life, having multiple companies showing on your credit report might not be the best thing, and it perhaps might hurt you down the road. It might help you right now, and then for a short run, but in the long run, especially if you're thinking about buying a house in the next year, that might not be the case. So with that being said, my suggestion would be, if you owe credit cards, pay down the balances, or if that's not the case, just try to keep the balances at less than 60%. Also, it is important that if you do have credit cards, or if you do have any loans outstanding, is that try to pay a little more than the minimum payment. You never want to just pay just the minimum. If you have a little extra, go ahead and send it over, because again, that is going to be it's going to help you down the road as well, and it might help you boost your credit score as well too. So never pay just the minimum. Pay a little more than just the minimum, but obviously, the best thing, my biggest advice would be, if you have any balances, and if you have any balances on any of the loans or credit cards, just to pay them off.
Milton, the credit simulator in the FICO tool and online banking would be a good one for that question. I think there's an option you could play around with it, and it'll say, what do I do if I take out a mortgage, or how will my credit score improve if I do this, or I pay off this? There's all kinds of options that I believe are like intertwined with your own credit history and your own your current your current credit and accounts, and it'll play around with that, and you could play with different options and see what might improve it, what'll break it, all that stuff. So that's in the Experian FICO tool within online banking.
Yeah, absolutely. ussfcu.org/myFICO.
All right. Look at us remembering the links. I like that. I like that.
Yeah, that totally slipped my mind, but you're right. Yeah, Carrie, thank you so much for bringing that up, because as she mentioned, using the simulator, it truly is going to give you I wouldn't say it 100% accurate, but it's very close. Because I used it myself, and it's just to get an idea as to what will happen if I do this. What will happen? Especially the question said, I'm looking to buy a house, so. If you get your credit to 800, but then you get your mortgage loan, I guarantee you that the 800 credit score will no longer be 800. You're gonna have a significant hit, but it's a good one because you know that you're gonna have the loan for an extended period of time.
Perfect. Thank you very much, both, for tag teaming on that answer. We want to be mindful of people's times, but we do have another question. And if anybody has another question, please send it right away. We will be able to answer it live. The next question that I have is, what happens if you pay weekly, same amount, and sometimes you use over your credit card and pay weekly also? Thanks. I think that would be a healthy credit score if the person is paying on time, correct?
Yeah, so if you actually divide your monthly, I'm going to say mortgage payments, into 4 weekly, you're going to hit your interest, especially if it's simple interest, really fast, and you're going to pay that loan off before the actual maturity date. So that is an excellent way to manage your finances and your bills. You're going to save a lot of money, especially the higher the balance, the more money you're going to save. So I hope that answers that question.
That was perfect. I really like that.
Absolutely. I was just going to add a little bit that what Kim was saying. I mean, and especially if you have a credit card and then you pay off the balance before you even receive a statement, that's great, because not only you have transactions in your account, but you also avoiding and eliminating the interest that you're gonna pay. So that alone, it's a huge, I mean, if you're able to do that, by all means, go for it. It's truly is wonderful, paying off your balances before they even show up in your statement.
Perfect. So great question. And, it was a tip for everybody if we want to, improve our, credit. So that's great. I have another question, and, I believe, if you have any more questions, please feel free to send them, but we definitely want to be mindful of people's time. The next question, looking to branch out from the previous question, what is the average FICO score for the best loan rates? Is it like 760 on up, or 780 on up? What would you think is the average for a good interest rate?
I would say 750 and above.
Yeah.
750 and above. So if you're over 750, you're looking at a great interest rate.
Yeah. Absolutely.
And then, go ahead, Milton. I'm sorry.
No. That's exactly what I was going to say. That's if you're in the mid 700s, rest assured you're gonna obtain the best rate. So even for a mortgage, right? I mean, for the person to say that there's 737, I believe, if I recall correctly, you will automatically qualify for that best interest rate that you can get available in the market. Matter of fact, you're gonna have companies fighting for your business. So hopefully we're one of those. So.
Thank you. And, before we passed 7, so we apologize for passing over the time, but this is a great, exciting topic. The questions were amazing. Before we move forward, I wanted to give a shout out to Amber. That's one of the attendees. I believe she emailed me earlier about the webinar. She was very thankful about us doing this. So Amber, thank you very much. It's a pleasure to meet you virtually, and we're so glad that you were able to join us. With that being said, Carrie, Kim, Milton, thank you very much for sharing your experience with us. Thank you for those great questions. Thank you for the great presentation. And we're looking forward to talk to each one of you next week. What's the topic for next week, Milton? Let's give them a little preview.
Absolutely, Eddie. Thank you so much again. Thank you all to the amazing panel and for you guys to making this happen. We look forward to having you back again next Wednesday. Next Wednesday is it's all
IRAs.
about IRAs. Yes, IRAs and how does it work? So fun one. We're gonna have an expert from that subject. So please feel feel free to spread the word, and we look forward to having you back next Wednesday.
Hope everybody has a great night. And remember that it's never too early to learn about IRAs. Have a good night, everybody. Thank you.
Thank you all.